Good morning, everybody. Hey, it's John King. It is Friday, the 16th of May. I'm super excited to be coming to you today. Just got back from a couple of days of a business conference. I'm super excited. I always go away to these conferences and come back rejuvenated, new ideas. I really just super excited to be with you this morning. Let's dive in. First and foremost, just a quick reminder, I do a podcast every single Tuesday morning, 6 a.m. Pacific time. If you are a business owner, if you're an investor, if you want to be a business owner, if you want to be an investor in properties, this is the podcast for you. I talk to both topics, both groups. A lot of people are both. If you're one or the other, check it out. Go to FromProfitsToProperties.com and check out my podcast every single Tuesday. All right, so what's going on? First of all, good news, rates are still under 7%. Man, that's sad that that's the good news. Guys, I don't know how else to say this, but there's nothing that says rates are dropping anytime soon. And so we've just got to come to accept this is the market and this is where rates are at. And so let's be happy that they're still under 7. Like we've had a lot of turmoil over the last month and the tariff issues, and we've seen rates be highly, highly volatile. And so the fact that they're staying stable under 7% is good because now people can make decisions. Now people can plan and decide, hey, this is worth doing or not worth doing. That's really what I want to focus on today. So we're seeing that inflation is coming down. That's really, really good. And the fact is that tariff issues really aren't as bad as what they were. So we've got tariff issues that are being resolved. Trump made an agreement with China. They postponed their tariffs, or at least a significant increase in the tariffs, I believe 90 days out. That's all good news for stability. That's good news to say, hey, maybe we're not going into the significant recession that we thought we were going to go into. But remember, recessions often lead to lower interest rates. And if we're not going into a recession, then we're not going to see rates forcefully pushed down because of the recession. So then the worry becomes inflation. If we're going to deal with a lot of inflation, then they have to raise rates, but inflation is cooling off. We just got an inflation report this week that shows inflation is lower. And that's the report for April. And during April, we knew about the tariffs. We started to see prices going up. So there's good news because the fear we had a couple of weeks ago, the fear I had a couple of weeks ago was we were going to end up in the position, even a week ago I was saying this, where we could have both high inflation and a recession with high unemployment. And now what's the Fed to do? But if we actually have inflation coming under control and employment stays in good shape, then the Fed can see a path to the soft landing that allows them to bring rates back down on the what's called the short end of the yield curve. Now that's a highly technical term. What it means is short-term loans. Well, the problem is mortgages are long-term loans. The Fed controls short-term, and the Fed clearly, there's a path, if this continues, that the Fed can keep lowering their short-term rates. That is not going to directly lead to longer or shorter, lower. It's not going to directly lead to lower interest rates for mortgages. Okay, but over time it will. This is probably the most optimistic I've been about the future of interest rates over the last 8 weeks, meaning that we have a good opportunity to see more stability with a regular gradual movement down, but we're not seeing the 5s. We're not seeing the 4s anytime soon. This is the market that we're in, and stability is the key that we're really looking for. But what we're dealing with right now is a spring market that didn't spring. We have more homes on the market and we have less competition. So that is a double-edged sword. And for a seller, that puts you in a tough position unless you have a very desirable home in a very desirable neighborhood where you've got a good price on that home. Okay. But if you don't have all three of those things lined up, you might be sitting on the market a little bit longer than you thought you would be sitting on the market. Remember, we had a bunch of people who took their house off of the market November and December of last year thinking, let's wait until spring when the market is hot and everybody's buying. The market is not, okay? They wanted it to be hot, instead it is not. And that's a huge opportunity because what I'm seeing right now is, again, I'm seeing some homes where the sellers are getting over asking price because it's well marketed, it's an attractive home in a good neighborhood, priced well. Competition means they're getting bid up over asking price. They're getting concessions paid to the seller. But that's not the norm that I'm seeing. The norm that I'm seeing is more about the sellers offering concessions to the buyers, getting worried because the house is sitting on the market for longer. And so we see the market shifting towards the buyers. This is really, really good news. Well, except for the fact that it still makes the payment way more expensive than what most people are comfortable spending, which is why most people have been sitting on the sidelines and they're waiting for house prices to crash. And I don't see house prices crashing. What I see is house prices continuing to go up. And once interest rates start coming down, house prices are going to go up even higher. So I want to talk to you about a different way of becoming a homeowner. And it's an affordable option by looking at manufactured homes. Now, there's two different ways to look at manufactured homes. You look at manufactured homes on land that you own, where it's attached to the foundation permanently and recorded with the county as a home. That's treated like a normal property. That is a little bit different than a regular single family home, but not that much different. So that is something that is absolutely an option. You're not going to save a lot of money on that. You're not going to have a significantly lower purchase price. But that is one option. Okay. The second option for manufactured homes is buying a manufactured home in a park. Now, there's a lot of mixed feelings about this, but I'm seeing more and more of them right now because really it's a way to have something that is your own, that you are building equity in, and it's way better than throwing away your money with renting. But I want to cover some very, very specific things about how financing of a manufactured home in a park works. So first of all, it's called chattel loans. So easy financing, yes, it's easy financing, high flexibility. We can go down to 550 credit score. Yeah, 550 credit score, okay? So that gives us a lot of flexibility from a credit perspective, but there's no down payment assistance. So you're looking at basically you need to come up with 5% of the purchase price plus closing costs, which is probably another 5 to 7%. So you're looking at maybe 10 to 12% of the purchase price that you've got to come out of pocket with. But if you're looking around, a lot of manufactured homes, depending upon what region you're in, could be anywhere from $50,000 to $200,000. So you're looking at 10 to 12%, which means that you're looking at anywhere from $5,000 to $7,000 out of pocket, all the way up to on a $200,000 home, you're looking at $10,000 to $12,000 out of pocket. That's reasonably affordable. And the most important thing that you need to pay attention to is the space rent. Okay. You're paying space rent on top of your mortgage payment. So make sure that you're fully aware that you've got two components to the cost. Now, I've got a website that can give you some information about manufactured homes. It is in the description down below. It is johnloneking.info/MFR. johnloneking.info/MFR, and you can get information about manufactured homes in a park. So that is a good option to look at. It's a smart alternative when it comes to staying a renter. Okay, when you're staying a renter, you're not building any equity. You get no tax write-off. You get no appreciation. When you buy a manufactured home, even if it's in a park, be aware of the fact you are going to have also higher interest rates. The best interest rates for manufactured homes in a park are 8.5% to 9%. Okay. So you're like, John, you said 7%, we're under 7, and now you're telling me 8.5% to 9%. Yes, but you're paying it on a much smaller dollar amount. So two big differences. You have to put your own 5% down minimum and closing costs, although you can have a seller help you with the closing costs. Or the other second thing you need to know, the second thing is interest rates are going to be higher. So best case scenario, perfect credit, big down payment, you're looking at something in the high 8s. If you're on the low end of the range, you could be in double digits, but it's on a much, much smaller loan amount. So it still makes it affordable when it comes to the monthly payment. So that gives you a good amount of buying power that you wouldn't have had otherwise. The thing about manufactured homes, yes, it is a lower cost alternative, but there's a trade-off. Okay. So first and foremost, they don't appreciate as quickly as traditional homes. They are on the scale of desirability. They're at the lower end of the scale of desirability, which means generally speaking, when a market starts going down, they're going to be the first to lose value. When the market starts going back up, they're going to be the last to start gaining value. So just be aware of that shift, be aware of that difference but you still get the tax write-off. You still get the appreciation. You still get the principal paid down. Every single month you make a payment, you're putting money into your own future wealth by paying down your balance. And most importantly, you get the pride of ownership. You get to make changes in there. You get to paint. You get to upgrade. You get to do what you want because it's yours. You don't have to worry about the landlord kicking you out. You have the stability to know what school district your kid's going to be going to because you have a permanent spot that belongs to you. As long as you pay your mortgage, as long as you pay your space rent, it is yours. And here's the deal. I've said it over and over again. Your payment for rent continues to go up over time. It's tied to inflation. Landlords continue to raise rents. And so your housing payment, the cost to own or to live somewhere, is going to continue to go up over time if you're a renter. If you're a homeowner, it stays the same or goes down over time. Now, granted, with a manufactured home in a park, you are renting the space. And so your space rent is going to continue going up, but that's only a portion of your payment. You're also paying down on principal. You have a mortgage that you have all of those financial benefits to, and it gives you something that you can call your own. So whether you're looking at a manufactured home, whether you're looking at a traditional stick-built home, a condominium, a duplex, a triplex, a fourplex, I don't care what you're looking at. The truth is, now is the time to negotiate. I'm not telling you every single home out there is one that you can negotiate on. But I'm telling you, look strategically. Find homes that have been sitting on the market for 2 or 3 weeks. That seller is worried right now. It's a great opportunity for you to help yourself, for you to find an opportunity to get in before everybody else is competing with you. So this is the time. I firmly believe it. We are in a perfect storm of opportunity for buyers that I don't know that we're going to see anytime in the near future. So now is the time to act. If you are a buyer and you're willing to be courageous when other people are scared, now is the time to do it. Guys, I really appreciate you listening to me. Hope everybody has an absolutely wonderful day. If you have any questions about anything at all, please feel free to reach out to me directly. Post a comment on whatever platform you're watching this on. Please share. If you haven't subscribed already, make sure to subscribe. Check out the description down below for the link to the page about manufactured homes, and I look forward to taking great care of you. Have an absolutely wonderful weekend, everybody, and we'll talk to you soon. Bye-bye.